Hello friends, let's have a quick fundamental analysis of chemical sector companies. Indian chemical companies are set for a major growth phase as the Chinese crackdown on polluting chemical firms has led to a global demand supply gap. I am considering Navin Fluorine, Aarti Industries, Atul and Vinati Organics for the revenue, profit updates and comparison. So let's take Navin Fluorine here where revenue CAGR growth of last 5 years is 10.7% while profit after tax CAGR growth is 20.4%. Last 9 months revenue growth is 6% and PAT growth is 15%. And we need to consider here the slowdown in the economy. Still the company is doing good. Navin has given the return of 113.38% in 1 year. PE is trailing at 36.98, almost near to industry PE of 37.24, and also plus share has come down to 3.54% as on December 19 compared to 5.09% as on December 18. So this is Aarti Industries where revenue CAGR growth of last 5 years till March 2019 is 9.6% while PAT CAGR growth is 20.7%. Last 9 months revenue degrowth is 8% and PAT growth is 17%. It has given the return of 56.84% in last 1 year. PE is trailing at 32.92, higher than the industry of 15.66. There is no plus here. Mutual fund and insurance companies has increased their shareholding. Promoters shareholding came down to 48.29% on September 2019 compared to earlier 48.71% in July 2019. So let's look into Atul Limited where revenue CAGR growth of last 5 years is 8.8%, PAT CAGR growth is 13.8%, last 9 months revenue growth is 2% and PAT growth is 56%. It has given the return of 52.44% in last 1 year. PE is at 24.2, higher than industry of 20.02 and long-term and short-term borrowings are nil. Also the promoters are having plus share of 3.92% as on September 19 compared to 6.56% as on December 18. This is Vinati Organics where revenue CAGR growth of last 5 years is 8.2% while PAT CAGR growth is 19.9%. Last 9 months revenue degrowth is 3% while PAT growth is 30%. It has given the returns of 25.89% in last 1 year. Price earning is at 30.57, higher than industry of 25.43. Revenue mix is 73% for export and 27% for domestic. Promoters are holding 74.01% share and there is no plus. Let's do overall comparison. CAGR revenue of 5 year is between 8% to 11% for all the 4 companies. PAT of last 5 years is approx 20% CAGR for 3 companies except Atul which is 14% CAGR. All 4 companies are struggling to maintain revenue growth due to slowdown in economy but PAT is good for all. Navin Fluorine has given the highest return 113% due to consistent higher revenue and PAT in last 5 years which is 11% and 20% and also in last 9 months during economic slowdown. Brokers are positive on chemical stocks and improvement is expected in this sector. So invest in dips. Thanks. See you again with another comparisons.